Welcome everybody, this is day one of the Wall Street crossover show sponsored by our friends at Admiral Markets. It gives me great pleasure to reintroduce the market commentator for Admiral Markets, Mr. Darren Sinden.
Good afternoon, Nick.
Known to his friends affectionately as Dazza.
Hello, sir.
How the devil are you, sir?
Very good, thank you.
Well, we saw you this morning on the show, so this is again going to be a daily slot for the American markets, the Wall Street crossover show. Is there a demand for this, would you say?
Yeah, I think so. I think, markets are becoming increasingly globalised, in a sort of almost 24/5, if not 24/7 type environment. And I think, it's important to take stock of what's going on in Europe and Asian markets and what may go on in the US, and this is a perfect time of the day to do it. So we sit right between that crossover between London and Wall Street. Well,
as always, okay, we haven't gone out and made a big sort of party about this. We're going to have a slow start, but please tell your friends, okay, if there's something you want to see in this segment, we're planning to do this Monday to Friday, 1 o'clock, 10 minutes there or thereabouts. But again, if there's a segment you think, do you know what, that would be really interesting, and we try and get Darren or myself to cover, then I guess we're all ears, aren't we?
Yeah, we are, of course, always interested in feedback from viewers and clients alike.
Okay, so you've kindly set up a number of slides this morning. Okay, this is the default. Okay, let's go into this. The first slide we've got is basically the data released over the European session. What caught your attention today, Darren?
Well, the biggest headline really wasn't actually, in fairness, wasn't actually out today. It was out yesterday. China cut the reserve requirement rate. That is the ratio of collateral banks have to post to the money they lend, and it cut it from 19.5% to 18.5%. That's the biggest drop, I think. I'm right in saying it, as far back as maybe 2008. What that effectively means is that the People's Bank of China is trying to add money into the system, might free up as much as $200 billion into the Chinese banking system. Interesting, though, to contrast that with their action on Friday, where they very much tightened margin trading rates that brokers can offer their clients. So tightening for private investors, trying to loosen the monetary conditions for commercial lending. However, whereas before that might have been greeted with
bullishness,
yes, Asian equities took that the other way and took it to mean that the powers that be in Beijing are probably more concerned about the slowdown in China than they previously thought. You remember GDP came in below. Around 7% last week, in fact, and so very much on the downward leg from where it's been, and equity markets in Asia, as I say, a bit concerned about that. And the Hang Seng, for instance, Hong Kong stock market had its biggest loss in 4 months.
Understood.
On that news. Elsewhere today, we had producer price data for March from Germany. On the month-on-month basis, it looked okay. Producer prices were up by 0.1% over February 2015. However, if you dig into the data, you find that they actually fell by a much bigger 1.7% year on year. And that basically, gives further life to the idea that things are, despite there being improvements in the Eurozone, there are still big problems there, and that deflation and falling prices are still an issue that the ECB and the individual underlying economies will need to wrestle with.
Understood.
And of course, the other issue that the European Union can't get away from is Greece. The Brexit's back in focus. The problems in Greece are mounting up. Neither side seems any closer to a compromise. So the time for a deal keeps running out. Barclays says the risk of an exit is at its highest ever, including the 2012 when the country defaulted. I think I'm right in saying also that Nomura now has also gone on record as saying they think there's a 40% chance of a Greek exit. No one really knows what that means, but it's obviously unsettling times for European markets.
Understood. So let's move on to the FTSE 100 movers and shakers.
Okay, well, a straight read through really. Although the Asian equity markets might not have taken the China news to be positive, certainly the London listed miners have, and they rallied by as much as 3% on that news. The thinking being obviously that if the People's Bank of China is going to continue to stimulate the Chinese economy, that could lead to more demand for the raw materials that these companies all sell by the shipload into China and want to continue to sell, and they'd like to sell more. Obviously, more stimulus could mean more sales. Elsewhere, interesting with mineral resources, Petrofac, the stock that's not had a very easy time of it over the last 18 months, no longer actually in the FTSE, to be fair, but I include it here because it's the big mover in London today. It's down 12.5% on an effective profits warning, where it talks about continuing issues at its Shetland gas plant, and rather worryingly for investors there, I think I'm right in saying it basically talked about not seeing a profit during the current lifetime of the project. So not good news for Petrofac, so down 12.5%. House builder Persimmon, the other significant fall today, though on a much smaller scale, down 1.3%, and really more fallout coming from comments that the management made last week when they talked about a planning backlog because of the impending general election. They just can't get planning permission through at the moment, so the business isn't running on all cylinders, and the market's just taking that with a little bit of concern and cools them down accordingly. Okay,
so let's talk M&A rumours and movers. Much going on.
There wasn't much in Europe, to be fair, this morning. The one sort of deal that did have a transatlantic feel to it was the sale by the Dutch telecoms operator KPN of its Belgian mobile business called Belgium mobile business called Base to Telenet. Now Telenet is owned by an American company, Liberty Global Media, most closely associated with a guy called John Malone, who's a really big mover and shaker in that space. So Liberty really consolidating its position in Europe, and there are definitely going to be more deals in the offing in both Europe and the USA in the telecom space. In fact, one today is on Capitol Hill, is Comcast Time Warner merger, probably the biggest deal that could happen in the space. There's a lot of concern about whether that will be in the public interest, and as I say, officials from both companies will be meeting Department of Justice officials there today to try and thrash out a deal. What could be done to make it happen, or will the deal have to be abandoned completely? We shall see.
Okay, so the US data points to keep an eye on.
Very quiet session as far as US data is concerned today. Mondays are never the busiest day, but today is particularly quiet. Just one survey coming out, which is the Chicago Fed National Activity Survey for March. Quite an interesting indicator because it basically takes a moving average of up to 85 key economic points and indicators. Not that widely followed, but it will just be worth keeping half an eye on it on a quiet day. The forecast is for a reading of plus 0.15. Prior was down minus 0.11, and the actual range of analyst forecasts, quite a wide range, between minus 0.26 and plus 0.20. So lots to look at there, even if it's not the most headline-grabbing number. A full day of earnings, and they're only going to get busier from here on in, and they include IBM, Morgan Stanley, Hasbro, Royal Caribbean and others. IBM's probably the pick of the bunch, but they are experiencing problems and expected to remain under pressure.
Understood. Okay, so let's go to US pre-market movers and levels.
Well, Hasbro numbers out shortly before the show. Very well received. The stock's up 6.3% pre-market. EPS was down on estimates, but the key here is that sales are beating expectations. The other interesting thing is that margins have improved at Hasbro by a decent amount, and the market's really taken that to its heart. Halliburton, big oil services company, obviously is a sector that's been under massive pressure from a falling oil price, but they beat today on forecast both by revenues and earnings as well. So good solid news there from Halliburton.
And wrapping up the chart points.
Yes, just points to watch rather than advice these, but euro dollar 107 even is a downside level to watch, as is 118.30 in dollar yen, although we bounced away from that in trade this morning. The key one to my mind, the upside on Aussie US dollar, because of this, again, potential beneficiary from further China stimulus. So watch 78.50 there to the upside. Could be a breakout level. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for day one of the Wall Street crossover show. We look forward to seeing you same time tomorrow, 1 o'clock Tuesday. That wraps us up. Any thoughts, any comments, let us know. Anything you want us to cover, we'll see what we can do. Have a good day, and we'll see you bright and breezy tomorrow. Thank you.